Hey everyone, welcome back to Corporate Decoder, the place where we make sense of what is really going on behind the fancy corporate speak. And if you are just looking for the raw truth about company filings, you've come to the right place. And if you appreciate that kind of unfiltered insight, make sure you are subscribed and join our Discord community linked in the description below. Today we are looking at LAGO Evergreen Credit, and let's just say they've been busy making some interesting moves in the private markets. They're essentially selling off little pieces of the company to certain investors, and we're going to break down what that means for you. Let's dive right in to see exactly what is going on. So this is a Form 8K, which is a report companies file to tell the public about significant events that happen suddenly. Think of it like a company's urgent news bulletin. The most important date here is the 15th of January 2026. That is when the core event we are discussing today happened. This is the company we are focusing on, LAGO Evergreen Credit. They are incorporated in Delaware. Many companies choose Delaware for their incorporation because it has well-established corporate laws that are often seen as business-friendly. This is their main phone number, but honestly, we're not here to call them, we're here to decode them. So let's skip past the contact details. Alright, this is where it gets interesting. This section is the heart of the report. It is about selling company shares to investors without going through the usual public offering process. LAGO Evergreen Credit sold a specific number of their shares. These shares are called unregistered, which means they were not offered to the general public through a stock exchange, and they are common shares, meaning they carry voting rights typically. Each share was sold for $25.41. This price is what the investors agreed to pay for a piece of the company. So when you multiply the number of shares by the price per S-hair, you get the total amount of money the company raised. In this case, it is a little over $13.6 million. That is a significant chunk of change. They sold these shares to accredited investors. Now, what does that mean? In simple terms, these are individuals or entities that meet certain income or net worth requirements set by regulators. They are considered sophisticated enough to understand and bear the risks of private investments. It is not like selling a candy bar on the street. These are investors who are supposed to know what they are doing. This whole deal is what is called a private placement. It is a way for companies to raise capital directly from a select group of investors without the complex and costly process of a public stock offering. It's faster and cheaper, but you can only sell to specific types of investors. This means they didn't have to register these shares with the government in the same way a public offering would require. They relied on exemptions that allow private sales to sophisticated investors. This is a common practice for companies raising private capital. So LAGO Evergreen Credit brought in over $13.6 million by selling their shares directly to a group of accredited investors. This is how private companies or even public companies wanting to raise capital outside of the stock market can operate. It's a way to fund growth or operations without diluting their public shareholders as much or with as much public scrutiny. And looking at who signed off on this report, we see Tim Gottfried, the chairman of the board and chief executive officer. This shows that the top leadership is aware of and responsible for this transaction. Now let's talk about what this actually means. From what we can see, this is a typical private placement of equity. LAGO Evergreen Credit got cash in exchange for ownership. This cash could be for anything from expanding their business, developing new products, or covering operational costs. The fact that they are selling unregistered shares to accredited investors means they are likely a privately held company, or at least this specific transaction is being handled outside of their main stock trading channels. For them, it is a neat way to get funds. For the investors, they are betting on the future success of LAGO Evergreen Credit, hoping that the value of these shares will increase significantly down the line. For us, watching it tells us that the company is actively managing its capital structure and has found investors willing to put in substantial money. We do not have detailed financial tables in this particular filing, which would usually tell us how much revenue they made or their profit margins. But this 8K is purely about this one transaction. What we can infer is that LAGO Evergreen Credit is likely in a growth phase or facing an expense that requires significant funding. The amount raised is not trivial, suggesting a strategic need for capital. The reliance on accredited investors means they are targeting individuals with financial wherewithal, which is standard for this type of deal. The lack of public registration suggests they might be a younger company or a subsidiary that hasn't gone fully public yet, or simply opting for a private funding round. The key takeaway here is that LAGO Evergreen Credit successfully raised over $13.6 million. This capital infusion can be a powerful tool if used wisely. However, the downside for existing shareholders of LAGO Evergreen Credit is that this sale dilutes their ownership stake. The pie is now cut into more pieces. For the new investors, they are getting in at a specific price and will be hoping for a substantial return on their investment, which as always comes with risks. Without more financial data from this report, we can't assess their overall financial health, but this transaction is a clear signal of activity and a need for capital. So to wrap things up, LAGO Evergreen Credit has just pulled in over $13.6 million through a private sale of its shares. It is a smart move to get cash, but it means ownership is spread a bit thinner. For the investors, it's a calculated risk hoping for future gains. This isn't a sign of a company struggling necessarily, but rather one that is perhaps growing, innovating, or strategically positioning itself for the future, and it needed cash to do it. The question now is, what will they do with this fresh capital? Will it fuel significant growth or cover essential but less exciting operational needs? That's the story we'll be watching. What is your take on these private placements? Do you think it is a sign of strength or just a way to get quick cash? Let me know your thoughts in the comments below. If you found this breakdown helpful, hit that like button and consider subscribing for more deconstructions of corporate filings. And don't forget to join our Discord community, linked in the description for even deeper discussions. Thanks for watching Corporate Decoder. Y'all see me in the next one.